Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Okay, we calculated an idea of what Giga Texas may lose in Q2. Now again, to be clear, we really just calculated the ballpark, and I think we're looking at a range between $150 million and $200 million loss for the quarter just from Giga Texas. I even ran a poll to get an idea of what people were thinking, and there was a wide range of values, from under $250 million to over $1 billion. The poll showed that only less than a fifth of participants think the factory will cost less than $250 million for the quarter. In other words, assuming we're correct, the vast majority is expecting it to cost significantly more. I showed you all how I arrived at every single number, and there were no comments thinking I'd done anything wrong, so I'm going to assume people were happy with my techniques and thus potentially adding to further credibility for our predictions. And remember, we're only concerned with the number that will be felt in the actual Q2 earnings report. The factory itself is costing more than that to run, or losing more than that, but we're just working out the cost of it relating to the profits, or cost of goods sold from the Austin Model Ys. And that was good to know, and considering we did it for Texas, we should probably do it for Germany too. We also want to do it for Shanghai, but we may as well wait for the delivery numbers for that, as they'll be out soon. So let's begin. Now obviously the Berlin site is significantly smaller than Texas, but the Model Y production floor is probably about the same size. And in reality, as we're not factoring in many of the other parts of Texas, then it might be about the same. We've already run our estimates as to what we think Texas is doing. One of the differences with Berlin is that we're dealing with 2170 cells, not 4680 cells, so they would have to have been purchased from LG compared to the running cost of Cato Road facility, producing low yields, which probably added to additional costs. Berlin has more workers than we estimated for Texas. On top of that, energy costs a lot more in Berlin than Texas. Therefore, I'm going to estimate that the Berlin Model Y floor potentially costs more to run than Texas, possibly even over $200 million a quarter. In addition to that, the costs will be higher there as Tesla are producing more cars there. The other factor would be that as Germany has been using 2170s from the get-go, they've also managed to ramp up a lot more, due to 2170s not being as limited as 4680 cells. So we should have a lot more sales from the quarter from Berlin than Texas, which should have hopefully subsidized some of the running costs. On top of that, Tesla was selling the most expensive performance version from Berlin, which carries some good margin. Although Germany appears to have started the production of the long-range versions now too, but that was only towards the very end of the quarter. The estimated deliveries for Berlin Model Ys is about 8,000 for the quarter. If they were reaching 20% margins, then we have about 14,000 gross profit per vehicle, which would bring in an additional 112 million contribution to these costs. To be honest, we're only dealing with ballparks here, and I could go into lots more depth and likely not get any closer. So I would place Berlin at $100 to $150 million loss for this quarter. I think the in-depth analysis we did with Texas helps us arrive at this ballpark figure pretty easily. If you want to know more how that was calculated, then watch the Texas cost video too. I think that we're looking at about $50 million less than Texas, mainly due to the additional sales. They will definitely help with the losses. Combined, I would guess $300 million total loss this quarter from both factories that will be felt in the earnings. These factories are costing more than that, but will not play into the quarterly earnings. I would say that a range of $250 to $350 million would be within one standard deviation of the actual figure. In my opinion, I think this is a really useful ballpark to use for Q2 earnings predictions. I would say a lot of people will be expecting it to be in excess of $1 billion, and that will dramatically affect their accuracy when it comes to EPS predictions. I mean, Elon did say they are costing billions of dollars, so I can see why some people might have jumped to certain conclusions. But for me, the numbers do not stack up if that was the case. So the next hurdle for this Q2 earnings estimate is going to be trying to work out how much Shanghai was affected by the downtime. Remember, this was complete factory shutdown, including having to ramp back up. But it makes more sense to do this when we get the final Shanghai production and delivery numbers, as with more accurate numbers we can get better results. I'm hearing some very low Q2 numbers being thrown around. My initial thoughts are that it may not be quite as low as people expect. Also, I think June should be pretty good for Shanghai, but there is still a lot to piece together. Also, Q1 received a huge regulatory credit payout, which is unlikely to be felt in Q2. We have the Bitcoin impairment to deal with as well. It's going to be a heavy quarter, but the market is of the realization that it is indeed most likely a one-off event, and things should return to prosperity the following quarter and knock it out of the park in Q4. Although it may not be as low as some skeptics are saying, it still won't look great in contrast to Q1. We think it's more or less priced in though. The deliveries we'll find out shortly, and they may still have a small impact on the stock price. A few percent either way, nothing that will hold and will eventually be diluted by macro events. Then the earnings will be approaching and should likely beat expectations. But even if it does the opposite, again, I'm not really sure how much weight this earnings report will hold with the stock price, because it's been such a volatile quarter. I think we'll just accept whatever it is and move on, unless there's some major surprises. It's likely what is said on the actual earnings call will have more impact to the stock price this time around. Key things to listen out for would be any 4680 progress. Whatever is mentioned about the line speed is of great value. Perhaps some of the specific 4680 specifications may be asked, such as charging speed, actual capacity, or energy density. Really, if anyone is listening who might have any influence on questions asked, then that is the most important thing to ask, in as much detail as possible. As for the future of the company, Elon has already expressed his confidence in achieving FSD this year. So in my opinion, I would love to know about Tesla's future plans in producing their own LFP cell, as this is going to be required for the next level up after FSD and robotaxis. Tesla's energy storage cell, which will be the most produced cell the planet will ever see. Then of course we have the actual shareholder meeting and the stock split, which I think by the time the earnings come out will be where more energy is focused anyway. Looking forwards with the company, not looking back at a tragic one-off quarter. And the energy for the stock price should also be focused more so there. There's always the chance that the split could take us up a notch, possibly over $1,000 stock price again. But with macros the way they are, a split doesn't carry quite the same excitement it did last time. In addition to that, it's possible that Tesla was originally aiming for a 5-for-1 split, but reduced it down to a 3-for-1, which probably won't carry as much enthusiasm. Still, it makes options trading that little bit easier. By the time you watch this video, we might even be out of Q2. We'll still have to deal with the results of what was Q2. I think most of us have looked on and realized the main issue was Shanghai, which is hopefully rectified. We're now concentrating on the 2 new factories ramping. In fact, we're already hearing that Texas is up to over 100 vehicles a day already now. The tooling equipment for the 2170 batteries arrived in Texas from China finally, so we will have Texas ramping up more with 2170 cells. It would seem that Tesla appear to still have quite a few 2170 cells. Perhaps Tesla are producing fewer longer range Model 3s and making more standard ranges to free up 2170 cells. I don't imagine Tesla will have enough 2170 cells for volume production for either Berlin or Texas though. I think they're really just being used as a placeholder to mitigate the running costs whilst they're waiting for the 4680 cells and helping ramp up the production lines as they take a long time. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.